everybody needs it. Every government, every school, every institution, you know, every charity, every religion, every family, every company, they all need capital, right? So Bitcoin will just spread as an asset to capitalize on. It is kind of the ultimate monetary union. It's a cooperative bank in cyberspace. Everybody that joins makes the network more powerful, drives up the value of their assets, and the more people that join, the more power they all have. Just like you have a union, if every worker in the country joins the union's pretty powerful. If nobody joins the union, there's no point in being in the union. It's like, here's the big idea. What if we created a union, but we put our money in it instead of our labor? It's not a labor union. It's a monetary union.
In this recent conversation with Efrat Fenigson on You're the Voice podcast, Micheal Saylor, co-founder and executive chairman of MicroStrategy, shares his latest insights on Bitcoin ETFs and their potential to transform the financial landscape. At the time of this discussion, Bitcoin is trading around $61,000, with under a 1% decrease in the last 24 hours and a 5% decrease over the past week. There are currently over 19.72 million Bitcoins in circulation out of 21 million. Micheal Saylor argues that Bitcoin ETFs have created a new gateway for institutional capital to flow into the Bitcoin ecosystem, potentially revolutionizing traditional finance. Before we dive deeper into this discussion, don't forget to like, subscribe, and share this channel. Now, let's hear more from Micheal Saylor on the future of Bitcoin.
You know, ETFs are an application. Companies on the Bitcoin standard are an application like MicroStrategy, you know, and Cash App and Strike and other mobile apps, they're an application. And the crypto exchanges like Coinbase and Binance, they're an application. You know, and eventually people will build it into their mutual funds, build it into their pension funds, build it into their insurance plans. More applications. Each application wants Bitcoin. Each application slurps the Bitcoin because they want capital, because we call it capitalism, because these are the capital markets. Every company needs capital. We build a civilization on capital. How much? $400 trillion of capital? There's $900 trillion of wealth in the world. At least half of it has to be pure economic energy or monetary premium. The world wants capital. Solves is the compliance issue. Compliance and capital control. When the ETFs were approved in the US, there was a whole set of institutional investors like pension funds and hedge funds with $50 billion, $100 billion, $200 billion. They have a lot of capital, but they could only buy through the ETF.
Right.
Even if they wanted to work for a year to set up all these other systems, they're not allowed to. Their charters prohibit them. So they've got a compliance problem. And then what happened is an ETF launched in Hong Kong. Well, you can imagine if you buy Bitcoin in that ETF in Hong Kong, that Bitcoin is not being custodied in the United States. The Hong Kong financial system prefers the assets to be custodied at a regulated bank in Hong Kong. So if I'm a Hong Kong investor or a Hong Kong institution or a Hong Kong company, I could funnel money into Bitcoin via the Hong Kong ETF. And so the real significance of the ETFs is they're solving the problem of credit access, compliance, accounting, convenience, reporting, and presumably there's going to be a different one in every city in the world or every country in the world. You know, if whatever nation, if the Saudis want Bitcoin to stay in Saudi Arabia, they'll have an ETF in Riyadh. The Emiratis will think, well, maybe we'll keep one in Dubai. There's already 34.
Wow.
34 holding more than a million Bitcoin. So I think we'll keep seeing a spread. I think you'll see an ETF in every country. In Argentina, they don't want you to take capital out of the country. So the logical solution for them is an ETF where the Bitcoin is custodied in an Argentine bank. But as that happens, you see what's going on is when the Chinese buy billions of dollars of Bitcoin, they'll drive up the price of Bitcoin in New York.
Mm-hmm.
As we just heard Micheal Saylor discuss more around Bitcoin ETFs, he elaborates on the unique properties of Bitcoin that make it an attractive asset class. He emphasizes its role as a decentralized global store of value that's uncorrelated with traditional risk assets. This perspective positions Bitcoin as a compelling alternative to conventional investment vehicles, potentially competing with major asset classes like gold, real estate, and even stock market indices. Saylor addresses the challenges that have held back widespread Bitcoin integration, including regulatory uncertainties and the need for more user-friendly interfaces. He argues that as these barriers are overcome, we'll see an acceleration in Bitcoin's adoption across various sectors of the economy. Now, let's hear Micheal Saylor discuss more on Bitcoin's adoption.
I think that Bitcoin adoption has been held back by misunderstanding of its true nature, because the industry has been collectively and colloquially called the cryptocurrency industry. So people's immediate reaction is it must therefore be a currency, and a currency is a medium of exchange, and they think of the euro and the dollar and the yen and the shekel and the whatever, and they think it's a currency, and their immediate reaction is, well, I know it's not legal tender, so it's tax inefficient to trade it, and I know it's not my government's favorite currency, and so it must be against the government, and it seems silly, and it's not stable, and it's volatile, and nothing's priced in it, so therefore I think it's stupid, or it's threatening. Now, if you step back and ask more deeply, what is Bitcoin? Well, Bitcoin is digital money. What is money? Money could be a store of value, a medium of exchange, or a unit of account, but the aspect of money that's a medium of exchange is currency. And the aspect of money that's a store of value is capital. More like property, but especially capital. Most people don't really think about a form of money and capital because we haven't really had a strong money as capital since the gold standard. The closest thing would be when you could hold gold as your capital asset, and then you used notes or paper currency that was pegged to gold or some other currency as a medium of exchange. But if you think about Bitcoin as digital capital, and you think about the dollar as currency, once you understand that, you see, well, currencies are medium exchanges, and the thing you need in a medium exchange is it needs to be legal tender, because you need to be able to transfer it tax-free. And of course, the dollar is the world reserve currency, and then other countries will have their own currencies. There'll be the euro, the CNY, the peso, etc. Any country that's an effective nation state will have their own currency, and when the nation state is failing after a war, it may dollarize. It may, nation states will adopt the euro in lieu of their own currency when they can't support one, or they'll adopt the dollar, or they'll adopt CNY. And so there's 120 currencies, but there's 180 or more countries, right? So, and in a country with a collapsing fiat currency like Argentina or
like
Turkey or Lebanon, you would prefer the digital currency stablecoin, because that dollar looks like a store of value to you, right? If you actually converted 1 million pesos to $1 million 25 years ago, you now have 1 billion pesos. So it's perfectly fine as a capital asset and as a medium of exchange when your existing economy is collapsing.
Yes.
So if you understand Bitcoin as digital currency, your reaction is immediate and negative and ignorant and inflammatory. If you simply turn the narrative and say, hey, it's digital property, you're going to buy it instead of buying a building. And that's a very simple thing. It's like you have $10 million, you live in Africa. You can buy anything in Africa for $10 million, any company, any building, any land, any set of commodities, any bonds. But the catch is you have to keep it there for 100 years.
Right.
Or you can buy Bitcoin. What would you buy in Africa that you would prefer to owning global digital property that you could take with you? And the answer is nothing.
Of course.
There's nothing you would buy, and there's no country you would buy it in. Nothing. You wouldn't buy a diversified portfolio of anything, right? And so that illustrates a point, and the point is Bitcoin is digital capital, it's global capital, and it conveys the same property rights to a business person or an individual in Africa, an individual with $100, a business person with $1 million, a billionaire with $1 billion. They all have a government. They all have the same property right, the same opportunity as a billionaire in Manhattan, as the King of England, as the royal family in Dubai.
As we conclude hearing Micheal Saylor's views, he remains optimistic about Bitcoin's prospects as a store of value and its potential to revolutionize the financial landscape through ETFs. Saylor emphasizes the unprecedented demand for Bitcoin products and the transformative impact of ETFs on institutional and retail investment in Bitcoin. We would love to hear your thoughts. How do you think the introduction of Bitcoin ETFs will affect Bitcoin's adoption and price in the long term? What challenges do you foresee in the widespread adoption of Bitcoin as a global store of value? Thank you for tuning in to Only the Savvy. If you enjoyed this discussion, please subscribe, like, and share our video for more engaging content diving into the innovative world of decentralized technologies and Bitcoin's evolving role in the global financial system.